go.
Yep.
Welcome to the show. Jason Bible, Robert Orfino, Texas Real Estate Radio Network. If you guys are on our Facebook page, I highly recommend you go over to at least my personal page. We did a ton of Facebook Lives yesterday from running around the countryside here. We bought at least one house. We bought
a lean-to.
That's a good way to put it. Yeah, it's a lean-to.
It's leaning on the other house.
Yeah, it's leaning on the fence, the house next door. So if you guys want to see us out in the field, we looked at, I don't know, 3, 4, 5 projects. And then I went around to a couple of buddies' projects.
Yep.
Turned into like an all-day thing for me, and it was a whole lot of fun. So, but today is the last day of Money Week. We are talking about today smart banking, and we have a special guest in studio, Catherine Orfino, who is our expert on smart banking. So, Rob, do you want us to get us kicked off in smart banking?
This is for sure one of the days where I feel really dumb.
Yeah.
Because we've got two very smart people next to me here. So we're going to talk about, the vehicles in which people can lend out of, right? So we talked about private lenders on Tuesday, but today we're going to talk about the actual products they might have. The big one I think is everyone knows is most people should know. And if you don't know, it's the greatest gift from the federal government, a Roth IRA.
Yes.
But there are some limitations. There are some throttles on that. And then you have some solo 401ks, which can be be careful about, right? And then there's some, medical savings and education savings for your families. And you learn all about that over at Quest, or you can learn about it with Carn Hall, UDirect, or a whole bunch of these folks around the country that are doing it. And then there's this thing that people kind of know about, but don't quite understand, and that's the IUL, which is an Index Universal Life Insurance Policy, which right away turns like, man, there's not too many boring subjects in my life, but life insurance is one of them. And of course, my wife went into it. So what happens is there's a lot of benefits in working with structuring some of those life insurance policies for investors. And so we're going to talk about the difference of the two, and we'll get into that. So, Catherine, welcome to the show.
I'm happy to be here.
This is the first time you've actually listened to the show, right? Because you don't get up that early. She just knows I get up at 5:20 and I roll out of bed, and then there's. I call her 8:05. What are you doing today?
Yeah. So, well, good deal. Let's talk a little bit about what a UIL is first, because people hear life insurance and they're like, there's term and then there's some other stuff, and wait, now you're investing with your life insurance. Like, that doesn't even make any sense to me. So what is kind of the basic nuts and bolts of a UIL?
So two basic kinds of life insurance, term and permanent. Term is like your car insurance. As long as you pay, you have it. When you stop, you don't. Permanent insurance is a form of life insurance that often can have cash within the policy that can be available to you for different things. There are a number of different types of policies that grow cash within the policy. My favorite is the Indexed Universal Life, or IUL. And I like that because it allows you to earn interest on your money based on the performance of some external index. So most people, when they have 401ks, when they have IRAs, many of them will invest in the stock market.
Great. Now, you should let everyone know that you are a licensed...
Yes, I am a licensed life agent.
Jason and I are just hacks.
We don't know what we're doing.
We don't have any license. We've just a driver's license, and you have a gun license.
That's right. We are unlicensed wild men.
Yes, for sure.
But what's lovely about the Indexed Universal Life is you're protected from downside risk in the market. So once you've earned interest, you've earned interest. It is always there for you. It will not go away. But you also get to participate in the upside in the market up to a cap. And what we find over time, I have a particular product that I like to use. Right now, we're illustrating that at 8%.
Okay.
So that cash grows in the policy. And what's great about it is that you can use that cash. You don't actually ever take it out, but you can use that cash as collateral for a loan to yourself. And again, the version that I like to use, that loan will never go above 5%. So in the long term, you've got cash growing at 8, you've got a loan going worst case 5, you're earning 3% on the spread plus whatever you use that money for. Hopefully that'll earn you some money as well. It's like being your own bank, right? Everyone goes and deposits their money in the bank. Maybe you make 1% if you're lucky.
So you're leveraging your own money.
You're leveraging your own money.
But you can use it for your own personal investments.
You can use it for whatever you want.
So I can take that money and I can invest it into a cash flowing house, and I don't need to put the cash back into the policy. I could take the net and put it in my pocket.
You could, yes,
right.
Absolutely.
Which is different than a Roth, right?
Right. So when you start to get into a lot of these self-directed accounts, Roth, HSA, Coverdell, that sort of thing, the funds have to go back, right?
Right.
And of course, there's some things where you're prohibited to lending to yourself and your family and all that. And it depends. Solo 401k is a little bit different. So there are a number of limitations that are associated with it. And that doesn't mean it's bad or one's any better than another. You just got to figure out exactly what it is you're trying to accomplish in your real estate business, so you can pick what works best. That's why I'm a big proponent of telling folks, look, you got to figure out what you want to do first.
Yeah.
Because all of this other stuff we talk about is going to work in concert with what your goals are.
Absolutely.
So maybe a Roth is a good idea. Maybe it's not. Maybe IUL makes more sense. So
well, I think the idea is how we deploy the capital, right? I think for sure you need both.
Yeah. Oh yeah, absolutely.
Right. This is arrow 1, arrow 2. Right, and then you can figure things out. So because you both with the Roth, you're both growing. That's tax-free.
Yeah, it'd be tax-free or tax-deferred, but it's tax-free in a Roth, yeah.
And then, the IUL, is that also tax-free?
The IUL, when you set that up correctly, neither you nor your children will ever pay taxes on that money.
So I'll tell you one of the other challenges is for certain individuals is getting money into the Roth. So let's talk a little about that for a second. So if you can, there are two ways essentially you can fund a Roth. You can, essentially write your check, right? And the second way is you transfer from one retirement account to another. So from a traditional to a Roth, and there'll be some taxes incurred and that sort of thing. But the real challenge is if you make too much money, then you are prohibited from, directly contributing to a Roth unless you're transferring from one account to another. And of course the max contribution is, what is it, $5,500, something like that, $5,000, whatever it is. So if you're just starting out and you've just started this Roth IRA, you put $5,500 in unless you can transfer from another retirement account. Well, if all your retirement accounts are sitting at your current employer, you can't transfer those over. You've got to have a separation of employment. So you can't fund these things unless you have that separation of employment so you can transfer those dollars over. So there's some real limitations there. Now, from what I understand on the IUL, there's a different way to fund those. So maybe talk a little bit about that.
Correct. So what we do with the IUL, and this is a technique that the wealthy have used for ages, 100 years, to build money for themselves and their children. And used to be every time you got a couple $1,000,000, you just go and dump the entire thing into a life insurance policy, fully fund it, and then borrow against it, pay it back, borrow against it, pay it back. The IRS eventually caught on to that and said, we don't really think that you're buying this for life insurance. We think this is actually an investment.
No.
So they have rules in place right now about how much you're allowed to dump in over a period of time. The lovely thing about software today is we can walk you right up to that line while making sure you don't cross over it. Because if you cross that line, all of a sudden everything you dumped in becomes taxable. So we take you right up to that line. We let you put as much extra cash in as possible so that it is in there earning interest right away. That additional funding is available to you as a loan for whatever you want to use it for.
So you could, let's say, you could borrow from yourself to do, let's say, a small out-of-pocket expense on an Airbnb, and then also cover the furniture and setting
Absolutely.
up all the other stuff in there. Okay.
Yeah, and I'll tell you, the hoops to jump through are trivial compared to a lot of other things. You basically call the life insurance company, say, I want a loan for this amount, and they send you a check. No credit check, no underwriting, no paperwork like you go through with the IRA to make sure everything is in compliance. You're taking a loan against your own money. It's really simple.
Right.
I like it.
You're probably not inclined to foreclose against yourself, right?
Exactly.
Man, that's kind of a brutal world. I'm going to foreclose on myself.
So you can imagine like everyone back in the 80s making a ton of money, slamming their life insurance. Beverly Hills, there's just a ton of money out there.
Just keep putting it in the IUL.
So you absolutely, that folks caught up on that. Okay, so again, I don't think they're mutually exclusive. I think you absolutely need both.
Agreed.
And we certainly do. And that's something that's important when you start deploying capital. Once you start making money in real estate, then the big next question is, what do you do with it, right? It's like after you buy that first Lambo, then what, right?
Yeah.
So you got to figure out a place to put this stuff, and here comes some strategies where you can grow this stuff. You've already paid your taxes on it. And so
making a lot of money sounds real sexy until you write that first tax check. You go, all right, this sucks.
Yeah, absolutely. Absolutely. So that's the big stuff. And we talk to people with these policies all the time. And then they're looking for, you're already getting 8% in that model. And so, boy, imagine you can do an Airbnb and make 18%.
Yeah.
Right? You can borrow at 5% to make 18%. All of a sudden, the spread gets really nice. And that becomes a nice product for the stuff that we've been talking about and been doing. But the same thing on the Roth. When we come back from the break, what we're going to do is we talk about is how do we get one of those vehicles to $30,000 as quickly as possible?
Yeah, that's a good
right. That's just practical, right?
Yeah.
Because again, it's going to be none of these work in year one.
No, they're kind of.
It takes a little time, right?
Why don't you give them the text number real quick?
Yeah, if you're interested in more information, it's 281-401-9008. That's 281-401-9008. We'll see you on the backside of this break.
Yeah, that's the problem, right? It's like, how do I get 30, 40, 50, 100 grand in this thing as quickly as humanly possible?
Yep.
2 minutes.
Thank goodness for software.
Yeah.
When I started doing it.
Hey, everyone. I know you're watching. We've got a really good crowd today. So if you could, please share this, right? Charles, I see you watching. Tina, I know you're watching. If you could share it, that'd be great. Likes and loves are always appreciated. If you're just joining us, this is my better half right here. This is Catherine, my wife, and she's talking today about IULs, the way to invest out of your life insurance policy and all the benefits it has. And then if you're watching on YouTube, hit the subscribe button below, and pretty soon we're going to have a bribe for you.
Yeah,
we're going to hit the button. We're going to give you. We'll raffle off something. So we'll have to do it just like Charlie does it. I'm getting good on this feed. I'm not sure if this is your main feed or my feed.
1 minute.
There's a lot of folks on. There are a lot of folks on.
Dude, thanks, guys.
And I don't see not all of it reports back to Restream. So
yeah, I'm keeping. Lots of likes and loves. Thank you.
Who was I chatting with yesterday that said, how's the radio show and everything going? Oh, it was Curtis and them. Curtis and Brian. I was like, man, the numbers don't even make any sense now.
Yeah.
It's just bananas.
Tina says, she said, who is that guest? I said, it's my wife. Tina says, well, that's why you're behaving.
Yeah, that's right. We affectionately refer to Catherine as the adult. Catherine's the adult in all this nonsense. We got an adult. Welcome back. Jason Bible, Texas Real Estate Radio Network. We are joined with Robert and his wife, Catherine.
Mm-hmm.
And we are talking about, this is the last day of Money Week, so we're taking it to a pretty high level pretty quick. We're talking about how you can invest in real estate with tax-free or tax-deferred vehicles, one of those being a life insurance policy. And we're going to compare that a little bit to a Roth IRA and those sorts of things. So if this is your first time ever hearing, wait a minute, I can invest in real estate with my Roth IRA, like self-directed accounts blow people's minds. Now we're talking about life insurance and how you can borrow from yourself. Folks are probably like, holy cow, I've never even heard of this before. So why don't you give them the number before we get started here?
Sure. So if you're interested in any of this stuff, give us a shout at 281-401-9008. Just please text us. And then, Catherine, you'll do a free hour consultation?
Correct. Yep.
These are all on her crazy schedule. So she'll get an hour in for you. You can sit down. Her time's very valuable, so make sure you can do it if you're interested. And then usually you want, if it's a husband and wife, we want both.
Yeah, absolutely. There. Whenever we're talking money, we want both partners there.
And so that's if you're interested in that free 1 hour consultation, it's 281-401-9008. And if you're in real estate and you're making money, now it's time to start looking at some places you can park that money so you can invest and grow that money tax free.
Absolutely. So before the break, Rob, you'd mentioned, hey, which vehicle could we get, 30, 40, 50 grand in the fastest?
Yeah.
Because it's not like, okay, we open an account, it's got $100 in it. Now what do I do?
Right.
You need to have a little bit of dry powder, if you will.
Yeah, a little juice.
Yeah, a little juice in that bad boy. So let's talk a little bit about that. How do you fund these things? How does the practical piece of this thing work?
So with the Indexed Universal Life, really our limit to how much you can put in is the IRS.
Okay.
Those guys.
So, I mean, I've done policies for $70 a month and for $5,000 a month.
Mm-hmm.
Rule of thumb is it's usually about 3 years before it builds to the point where there's enough money in there for you to borrow against.
Okay.
But after the 3-year point, with the compounding, it starts to really accelerate.
Mm-hmm.
And so how much you want to put in is entirely up to you. I'll use the software to figure out how much we can take you to without violating the IRS guidelines. And in fact, I love the particular product that I tend to use for this. The company actually, if it's going to take you over that IRS limit, they won't cash the check.
Oh, that's awesome.
They will call you and say, did you mean to do this?
Yeah.
Are you sure you want to do this?
Yeah.
And of course, the answer is
no,
not at all.
Oops.
So, good rule of thumb, 3 years, but after that, it just accelerates.
And essentially, I mean, you can lend the money to do anything. I think that's the real advantage is use it for just about whatever.
Yeah, on yourself is the real key.
Yeah,
right.
I mean,
So
in theory, if you wanted to get a stack of $100 bills and light them all on fire, you could do that. I'm not sure
I feel like I've been doing that lately. But...
Yeah, I think so. A couple of EMDs gone south. Yeah.
So
now with a Roth though, it would take. What's the contribution this year? $6,000.
That's $5 or $6 grand.
Yes.
The catch up is I think it's 6,000.
65 is the catch up.
Okay, 65 and then it's $6 grand. Yeah.
So it's going to take 4 to 5 years
Mm-hmm.
to get a good $25,000 in there and to do that. And so
the only other way to do, of course, you can transfer from different accounts.
You can roll stuff over.
Yeah, you can roll stuff over. But then the other way to do it is, and this is how we're going to grow a couple of ours. Obviously, is partnering with folks and all that. But I mean, you're really working that rock like
so
a
let's
business.
let's put a disclosure out there.
Yeah.
So we have the Private Lender Summit coming up on Tuesday,
Yes.
and that's for lenders.
Mm-hmm.
Sorry guys, looking for money. That's not what the room is. And in that room, we might be talking about investing in other people's, like Mike's deal up in Magnolia. Like we like that deal, but so we would never, Jason and I would never be asking any of you to put your money together to come and invest in us.
No.
You have to do that separately outside of our awareness. That's a SEC violation. So just want to see him
friendly SEC.
I know, and the lawyer's in Italy, so we can really say anything we want to speak. But
she's not listening to the show right now.
If she caught this, she'd give us hell. So.
Yeah, well, whenever we talk, she's like, we ought to just have her on the show, have her sit here in the corner, and just say, don't say that. You can do that.
She's a hotline, just like a little red button, just a little red light in her. She hits the.
Guys are getting too close to the line. So if you got some money in an IRA, you got some money in a checking account, you want to do some real estate investing, like real investing where you're putting it into a fund or you're lending it out to other real estate investors, the Private Lender Summit on Tuesday night is the place to be. It's just.
And Catherine will be there. And we'll go over.
Catherine will be there. Ashley's going to be there too.
Yep.
So
I think we're going to talk about foreclosures on closing on notes that have failed.
Yeah. So
a lot of people asking that question.
So just go ahead and give them the number again. That way we can get them the information if
yep.
you want to go.
It's 281-401-9008. Just go ahead and text us and right around you want. Hey, I want to know more about this life insurance. Hey, I want to know about Roths. Hey, I want to know about the Private Lender Summit. Just put it in there. So, and we'll get back to you.
I love the Private Lender Summit. It's a very high quality group of folks. Very serious people.
It is. Yeah.
It's a lot of fun. It's my favorite meetings we put on a month. So, all right. So let's go back to So now I got this. I mean, literally, is it as easy as it goes into the magic box, and the magic box tells us we can put this much money into it.
Yes.
How does it? So what are they looking for? How is it? What are the rules here?
Well, it's life insurance.
Okay.
So the big thing is it does have to be medically underwritten.
Okay.
Which means, most people qualify, but it does have to be medically underwritten.
Okay.
That's part of a process, and it takes a little while to get through. So good rule of thumb, particularly if we're going for larger amounts, is it probably realistically takes about a month to get through the process. Because the life insurance company is planning on having this with you for the next 50, 70 years.
Yeah.
And so they're looking at everything.
Mm-hmm.
But once you have it, you can just put the money in right up to the IRS guidelines. And what's really cool is maybe you start putting in a little bit less today with the intent of down the road upping that amount.
Okay.
Well, down the road, you can put up that amount right up to the IRS limit to that year. And then in lump sum, the difference between what you paid and the max for all previous years.
Now, that is really trick because you cannot do that with a Roth.
Correct.
And it drives me insane. So you could establish the account in your 20s.
Yep.
And you're putting in $50 a month, $100 a month. And then in your 30s or 40s, you're doing a little bit better. Maybe you're crushing it in real estate. You go, it really needs to be about $10,000 a month plus one huge lump sum from all those previous years. You just drop it all in there.
Yes, exactly. And of course, all that extra cash starts earning interest immediately.
That is pretty sweet.
And then on top of that, there are death benefits.
Of course. Yes.
Right?
It's life insurance.
It's also a true life insurance benefits on that as well.
And life insurance passes to your heirs tax-free.
And I think the big thing is you can invest in yourself with that money, right? Which is the hold up on the Roth.
Yeah.
Right? Everyone's trying to figure the work. What's the gray area? Jeff Watson, tell me how I can invest in my own apartment building and just put cash in my pocket. You can't.
Yeah, right? You can't. Sorry, man. There's no way around it, right?
Yeah.
All right, we get back from the break. We'll talk more about these alternative ways to finance your business and save some money on taxes. Jason Bible, Robert Orfino, Texas Real Estate Radio Network.
Did you see that really big long post?
Yeah, we can address that.
Hey, William, thanks for watching, William. William spoke up.
All right, I'm going to warm some more water.
This is a 4-minute break.
Okay, we got some time. Hey, guys, if you're watching on Facebook, please give us some likes and loves. Share it. Dean, I see you're watching. If you could please share that to your feed, that would be great. There's usually a share button somewhere either on your phone or on your computer. We just hit share. That'd be great. If you're watching on YouTube, hit the subscribe button below. Don't worry. We're going to go back. Everyone who subscribes up until like the first 1,000 people that hit that subscribe button, we're going to give them we'll put them in a really nice raffle and give them something really nice. We'll squeeze some of our sponsors and make them throw some stuff in. So we'll get you like a swag bag and some vouchers and things like that. Again, hey, we're talking today about IULs and Roth IRAs and investment vehicles and all that good stuff and how to approach those folks and get them to work from that. I have used folks who both have Roth IRAs, 401ks, cash, and IULs. And so this is absolutely strategies that have to work. You just have to understand the different nuances of it, and that's what we're covering today. So again, if you're finding this valuable or at least somewhat entertaining, and you can appreciate we do a new show every day, then go ahead and just please give us some likes and loves and give us some shares. Thanks. And William, just text 281-401-9008. Just go ahead and text me at that, and then I'll get you Catherine's contact information. Good morning, Tammy. Got a lot of good interaction. How much time we have, Rick?
Oh, 2 minutes.
Let's. Where are you watching from? Is everyone in here in Houston or any of the California? No one's up in California. Any New Jersey folks?
This is like 4 in the morning.
Florida. Yeah, no one is up in California. Yeah.
Yeah, because their freaking networking events go till like
Oh,
midnight.
they do. Yeah. It's hard to get out of
First
those.
time Rob drags me out to California, like, all right, man. I mean, this one gets started about 9:30. 9:30.
Yeah. Bill Tan's event. They have dinner at 11:30 at night.
Yeah, it's crazy.
Oh, it was rough. And like everyone in the Chinese restaurant's trying to get out of there. And 40 people at this big table. Houston, great. (281-401-9008). He's having a Sometimes folks have problems with my Jersey accent.
Well, and if people are driving.
Water. Get some water.
I'm sure if people are driving too.
1 minute.
Yeah.
It's somebody's job here at the station to refill the tea because I notice I start getting real low on the
I think
vent
there's
and it pops back up.
I'm not sure if it's a service because it looks too full.
Yeah.
Someone's really on it.
Yeah.
We really got to get the refrigerator now.
It's just sitting at the house?
It's sitting in the garage. I'm sure there's frogs living in it.
You know, I got a truck next time I'm over there. Do you have a furniture dolly?
Yes, I've got several. I need to just start. It's all in pieces. So there's the doors and the drawers. I got to start just bringing it over.
What, like the doors are off?
Yeah, because it didn't fit through
10
the door.
seconds.
It's a really big refrigerator. Huh.
Welcome back. Jason Bible, Robert Orfino, Texas Real Estate Radio Network. We are joined in studio with Catherine Orfino, and today we're talking about smart banking and how you can use some different vehicles to fund your real estate deals and not pay taxes or pay less in taxes, or unless you like paying taxes.
I don't mind paying taxes. I'm going to say it. I really don't. It's the price of being a citizen.
Oh, that's true. Yeah, it's the price of admission,
that's the
right?
Price, right?
Yeah.
And what I don't like is every year changing, right?
Oh, it drives me
Just
nuts.
tell me what the cost is, and I'll have that as a line item in my mental pro forma, and I can move forward. But listen, I love the highways here.
Oh, they're great, aren't
Like,
they?
if people complain about Houston traffic, this is nothing. This is so easy to get around. Oh my goodness! I mean, I get it if there's a wreck or something like
Yeah.
that, and Texas is probably like the most dangerous highways in the country.
Mhm.
People are crazy here, but the highways are beautiful,
Mm-hmm.
right? They're absolutely gorgeous, and that came from somewhere,
Yeah, somebody's writing checks.
right? The water tastes good. I mean, you ever tasted water in Central Florida? It's horrible. So I get it that my money has to go there, and it does sometimes get lost over there with Jimmy Goomba, the contractor
Yeah.
squeezing. Yeah, it does. There's always inefficiencies in every system, but for the most part, I feel good when I pay my taxes.
All I want is let's just establish the number, whatever that is. It's a percent. It's a what?
Right? What's the
stat?
number?
And then you guys can all fight about where it needs to go.
If you tell me my numbers for the next 15 years, I'd work really hard paying it off this year.
That's a good idea.
But
Yeah.
just hey, okay, federal government, tell me what I need to pay you for the next 15 years of my life so I can stroke that check.
Can I just write you a check and we don't have to
I
talk
don't
about
have
it
to
again?
worry about it. I don't have to feel guilty. No one's complaining about how much I
That's
make.
right. I'm done.
I'm
yeah,
done.
Here you go. We're good. Okay. All right. A little off topic there. So
We usually do.
yeah. So we're looking at Roths versus traditional IRAs, solo Ks, and then of course there's and some folks that are in real estate have heard about those things, but an index universal life policy to self-fund some of your real estate deals is kind of unique. So
Yeah.
maybe you guys could talk about some of the deals y'all have seen that have gotten done, or some of the clients that you've worked with, Catherine, and how they've used that vehicle to help grow their wealth.
Absolutely. Something that we see a fair amount is someone doing a flip,
Mm-hmm.
hard money for the bulk of it,
Mm-hmm.
and the gap funding comes out of the IUL.
Mm.
And so that is a loan, right?
Mhm.
So it's not income, it's not taxable. You use it for the gap funding, you complete the flip, you pay back your loan to the IUL plus the, up to 5% interest. It's a little lower than that right now, but it'll never go over that. And then, of course, you have your actual rest of the profit from the flip, which you can keep, and that will be taxable. But the loan interest obviously is not. It's just an expense of doing the flip.
Now, let me ask you, while you borrow that money, so you take $25,000 out, you're borrowing against it, so it's technically not the principal, right?
The cash never leaves
Right.
the IUL. It continues to stay there earning interest.
So does that principal still make interest?
Yes, it does.
So you're making money on your gap funding.
Yes. Yeah.
So you're borrowing money and you're making the delta, right?
Right.
Exactly. And we're, right now, the way we're illustrating, that should be around 3% even with this loan outstanding.
So 5% for the loan and 8%. So you're netting 3% on your money while you're using it in a real estate deal.
Yes.
Did everybody catch that? I want to make sure everyone got that.
Yeah, what's that number again?
Yeah, they're like, why don't you give them the number, and then I'll explain. We'll talk about what we just explained.
So,
It's 281-401-9008. 281-401-9008.
So your account is growing at 8% interest.
Yep.
You borrow money from your IUL at 5%.
Yes.
To go do some kind of deal. So you're making 3%.
Correct.
8 minus 5 is 3. So you're making 3% on your money that you've lent to yourself that you're now using on a real estate deal that you're probably making 20, 30, 40, 50% on.
Correct.
Not bad. And if, God forbid, anything happens, you have life insurance as well.
Mm-hmm.
Someone benefits from that.
I don't know, guys. I just don't. I'm not sure this sounds like a good idea.
Yeah.
Now let's talk about making it real fun. Let's go buy an apartment complex.
Whoa.
All right.
So we're going to buy an apartment complex. I don't know, next 2 weeks.
We're still in theory on this because it's still a little rough. We'll keep going.
So you need let's call it $1 million. We need $250,000. Let's call it $300,000 out of pocket.
Yep.
We could borrow that $300,000 out of our IUL to do the down.
Yes.
We're borrowing that money at 5%. We're borrowing from the bank at probably about 6
or 7, yeah.
6.5. And then we go do that deal. It costs us, quote, no money out of pocket, right? Because it's the IUL's money. And then at some point in the future, you refinance that property and you can send that $300,000 back.
Yes.
So I'll tell you, one of our 5, one of the smartest people we know and money guys, let's just say his first name's Steven.
Mm-hmm.
My understanding is he has a $10 million life insurance, right?
Mm-hmm.
That they funded up to the max and all that stuff. And he didn't have the money. So he basically got a borrower to pay for the massive life insurance policy. So it's like a mortgage payment for him. But he immediately gets to deploy $7 million. And this is how he was going out and buying all those apartments.
That is brilliant.
Yeah.
Yeah, there's a reason.
Now, I don't know any of the legals or the accounting. I will give you that guy's information, and he will tell you he's one of the smartest tax guys I've ever met in my life.
They're very sharp over there.
Yeah. Very, very sharp guy. But he basically has a mortgage payment on his life insurance policy.
Oh, that's great.
So someone lent him to slam it from year one with $10 million or whatever it was, and then he's able to borrow out of that and do investing.
Huh. Interesting.
So that was a breakfast that when he told me that, I was like, I can almost understand what you just said to me.
God, you know what you could do? All right, you know what you could do? You could partner. Oh, this might get a little complicated. You know what? I'm not going to mention this on the radio. I'll mention this during one of the breaks.
Okay.
Because this will really confuse it. I think you can actually partner with an IRA too.
Maybe.
And then I think you, depending if it's a solo, it's different. But if you could partner with,
we need the cover Rob and Jason's butt summit.
When Jeff gets in town, we'll
when
have
we
that
get all the
conversation.
lawyers and everyone together and figure out, hey, we got a lot of money moving in here, a lot of taxes to pay.
We're buying a lot of
Someone help
stuff.
us.
We get back from the break, we'll talk more about smart banking. Jason Bible, Robert Orfino, Texas Real Estate Radio Network. So if you got enough,
So he's paying like whatever $2,500, $300 a month on it, and it's a 10-year interest only with a balloon. So he knows I'm going to make that much money. And I'm going to slam it and blah blah blah.
that is crazy.
Yeah, really smart. I was like, and he's telling me this, and he's looking at me. He's like, "Do you get it?" I'm like, "Nope." and he explains it again. I'm like, "Okay, one more time." And he explained that, and I went home, ran home, told her, and she's like, "Yeah, I've heard people do that. But that would be
Advanced.
very, very advanced, right? So it's layer upon layer. It's like the guy who doesn't mind having 60 credit cards, right? Because he knows the system, right?
See, what I want to do is I want to sit down and I want to map this stuff out because the deal volume we have now is starting to really pick up, and there's the financing side, there's the liability side. So I'm thinking about this like the Airbnb we bought yesterday. So to each one of those, I would imagine we want each one of those Airbnbs in a separate LLC.
For sure.
So then how does that complicate things financing wise? But then how does it operationally? Of course, you got a whole separate set of books for all this stuff.
1 minute.
I'm just thinking in the back of my mind, I'm like, things are going to get really complicated really quick.
William says, I think life insurance policies are prohibitive assets for IRAs. Probably.
Yeah, but you're not going to have the IRA invest in the insurance policy.
You're going to joint. So we'll do the number again. We'll talk about the least amount to invest, and then I'll talk about how I make Catherine. How long is this? This is the second to last
20.
one.
Yeah, this is 2 minutes. You got 20 seconds.
How long is the segment? This is 4 minutes, 6 minutes?
44 to 53.
Okay, that's fine.
It's like 8,
Got it. Thank you.
9. 10 seconds.
Welcome back. Jason Bible, Robert Orfino, Texas Real Estate Radio Network. We've got Catherine Orfino in the studio. We're talking about smart banking today, how to pay as little taxes, even though Rob said he loves paying taxes. Hope the IRS is listening.
It's your duty.
I know, you got to do it. Yeah, you got to do it. I don't want to be that guy that we could totally do it because I know exactly what they're doing. We could totally go on Facebook and start bragging about we paid no taxes this year because of depreciation.
Listen, there was a year I paid less than Mitt Romney.
Yeah.
Right.
Yeah.
So I know I'm not begrudging that. I had a really smart accountant.
Yeah.
Here's the rule. You need to and feel good about paying every single penny of taxes that you owe, and not 1 cent
That's right.
more.
Yeah.
Right. The problem with people is 65% of Americans overpay on their taxes.
That's right.
Yes.
Because they don't know the deductibles that are available to them.
I agree with that.
So, Catherine, do you have to start with $100,000, or can you start with like $100 a month?
You can start with $100 a month.
So this is one of those things, Jason, that for me, I know for sure. I met with a Prudential guy back in the day when I was in college, and he was trying to explain this to me, and I didn't get it. And it's one of those things now, 25 years later, I'm like, man, I wish I would have done it. This is one of those things where if you don't do it today, tomorrow you're going to regret it.
Right.
And it's that even 6, 9, 12 months of regret. So for sure you want to reach out. The number is 401-9008. Last thing I'm going to ask you is, are you only allowed to open up a life insurance policy for yourself?
No, you can get life insurance on your spouse, on your children, on your grandchildren.
Great. And then you can control those assets? And
yes, you can.
Great. So there's 2 that you need to open up immediately.
Right. Yeah, they're not going to be very expensive, I'd imagine.
No, they're not. They're going to be. Right. That's the point of it. Like if you really need to take care of this in your 20s and 30s before your metabolism slows down and you have all kinds of health problems and all your way. So if you guys haven't recognized, I totally married up. Like I always say, I hit the wife lottery. So I'll just tell you a quick little story. I met Catherine in St. Louis. We were at a online video game convention. We're total geeks and nerds, right? And she played a dwarf paladin, and I played a half-elf ranger, right? So total geeks like that. We met at the convention. She was clearly the prettiest woman there, and there was a flock of nerds around her.
Oh my God, there's a girl here!
Oh my God. And so at the time, I was actually programming the game. I was a game designer, and I did some programming. That was fun. And I saw her, and I'm like, ooh.
There's a woman here.
What is that? What is that doing here? And so I sort of ghosted her around the convention. I was always like within 5 or 6 feet, just outside of the creepy zone.
Yeah, just creepy enough to catch a glaze.
Just to catch a out of the eye and stuff like that. And then I sort of internet stalked her for 6 months, and finally we started a relationship. A little online first, and then phone, and then we met. And we got married about 3 years after we met or so. And we got married in Disney World, so that's why we'll talk about Disney.
You guys are big Disney people.
We got married in Disney, yep. And she never talks about herself, so I do it all the time. She got into MIT for chemical engineering, right? So the easy, the easy humanity.
Yeah.
And she decided she didn't want to be a chemical engineer after 2 years, and she went and got her finance degree from Northeastern. Then she was in the Michigan MBA program. She worked for big banks. She did commercial banking in Europe. Then she got into the tech world because she was interested in that. She taught herself how to code. So she learned to code.
Learn to code, bro.
Learn to code, bro. And then she went on to she got hired by a company that's still out there, but it got bought by Google. And then her claim to fame is she led the teams. So remember AOL used to be like, remember it was like whatever an hour, then it went to like $9.95 a month, right? Her team was the one that took that from subscription based to ad based. And that's when I knew her. And she was up at 2:00 in the morning talking to China and Russia, and all. So she did this big multi-billion-dollar project. Was what she worked on. So she's, as I like to say, she's wicked smart, right? And then she met me. I took her to California, and I made her a contractor. So in California, if you have 1 year's of construction experience, which we did, and you have a 4-year degree, you can sit for the exam. So she sat for the contractor exam.
You have to have an undergraduate degree to be
or you have to wait 4 years.
Oh, okay.
Or you have to be a 4-year apprentice. So there's a little loophole to get you there. So we did 1 year's experience. Someone signed a letter, one of our guys we work with. And she studies. Man, she studies like she studies everything. She actually reads the book. She doesn't study for the test. She actually reads the material. She wants to know it. So there she is in a room full of guys, right? And it's 2 parts to the test. And the first part is like ethics and law. And that's, you're given 90 minutes for that test. And then the other one is actually code, and you're given like 3 hours for that. She was out of there in 20 minutes, went to the car, studied, took a little nap, went back in for the 3-hour part, was out of there after an hour with all these guys just looking at her.
What is she doing?
She failed, right? She must have quit, right?
Yeah.
No, she aced it. Same thing with the real estate, same thing with the life insurance. I mean, I'm a complete dummy next to her, right? So I completely married up. She's beautiful. She's smart. She puts up with my nonsense.
There's a lot of that.
There's total nonsense. Oh my God, there's singing and dancing with the dog in the morning while she's trying to sleep. It's crazy. And she's a total geek like me, so I'm lucky. I found an accomplice, right? More so, and a true partner in life. Mm-hmm. So I'm very blessed to have her. And again, I think like I totally hit the life lottery.
And I am sure on the insurance side, you are obviously very well versed in all the products you guys have and how they work, and finding the right product that works for the right person, the right family.
Absolutely. I mean, there's 29 different life insurance companies that I work with, and so it's always a matter of finding the one that's the right fit for the situation. And that's, by the way, why we spent a little time talking together before we sign anybody up for a policy.
Yeah, it's and that hour-long consultation you have with them, it's, hey, we need to know everything you got going on here.
Exactly.
We need the entire picture, and then it's what are we trying to accomplish here? So we've got the right vehicle, and it is. Exactly. I've always loved the analogy that is a vehicle because we are going somewhere.
Yep.
Like I don't want to drive to LA when we have to go. We want to get on a plane for that, right? So you've got to pick the right vehicle for wherever it is that you're trying to get to. So, Rob, you want to give them the phone number again?
Yeah, sure. It's 281-401-9008. That's our collect all. So if you're interested in sitting down with Catherine for an hour and going through and seeing if that vehicle works for you guys, and depending on what stage you're in, and it should, then you're going to text us at 281-401-9008. Hey, we're going to wrap this up when we come back. This is Robert, Jason, our guest Catherine. This is the Texas Real Estate Radio Network.
Okay, 2-minute break and then
last hard stuff. Yep.
You want me to talk about the perils of waiting?
Yeah.
Ooh.
Yeah.
Yes. Put on the pressure.
It's a pretty crazy number when you look at the compounding.
Oh, I bet, yeah. Yeah, so could you use your IRA to buy the apartment complex, and then any gap that you had, could you then borrow from your insurance? Could you borrow from the IUL for the difference?
That would probably be a tax accountant or lawyer question. I would guess as long as it's all passive that would work. I don't know that it matters where it comes from, but I'm not the expert there.
You know, you deriving a personal benefit from the life insurance policy, yes, but it's going back. I don't know. That would be an interesting question to ask. William, that was the question I wanted to know. Could you take a Roth? Let's say you got $1 million sitting in your life insurance.
Mm-hmm.
Could you borrow the $1 million, but have your Roth as the one that actually owns the asset, and the loan is from your IUL, and that way all the equity and cash flow and all that other stuff goes back into the Roth?
Probably not.
I don't know.
I'm pretty sure it's not. I'm pretty sure that's why that dude Steven did the mortgage thing. I think if he figured that out, he would. We got to get him on. He'll come to Houston. It's over tax season. Him and his dad want to do some investing here, so we'll get him out. Hey, Derek. Derek's watching.
10 seconds.
Even using the UIL or the IUL, Derek? Welcome back. Jason Bible, Robert Orfino, Texas Real Estate Radio Network. We've got Catherine in here. Catherine Orfino, she has given us a good education on IULs and how you can use them in real estate. You can use them in anything. It really doesn't have to be just real estate, right?
You buy vintage cars.
I like that.
Yes, you can.
I like that. And you cannot do that in an IRA because it's considered a collectible.
Right.
So I certainly like that. So let's talk about the peril in waiting.
Yes. So because the cash inside the indexed universal life is earning interest all the time. And it's growing tax deferred. And again, we set this up correctly, tax free ultimately for you and your family. The compounding interest is an insanely powerful force. And like I said, it takes a little while to get started, but once it gets rolling, it just takes off. And you don't want to wait is what it boils down to. I talked to one woman, I believe she was 42. I talked to her and I showed her what this could do for her. She was interested in using it for real estate. Okay, it'll take 3 years to build. She said, I like it. I'm not ready to do it right now. About a year later, she approached me again. And I showed her the numbers again. And I showed her that by waiting 1 year, by the age of 65, she had lost $500,000 in additional cash inside the policy that she could have had access to. 1 year.
So it just costs you $500,000 a year, guys. No big deal.
Right.
At 40, if you're 40, right?
Exactly.
And if you're listening to this and you're in your 20s, woo, man, that gets really expensive.
Devastating. Yeah. Right. And again, this is just one of those things that not a lot of people talk about, not a lot of people know about, right? But when someone sits down, you know, the family advisor, the family fund guy, he's setting everyone up with these. All you guys are going to get this, and all you guys are going to get that, and then we're going to put the money over here. And there's a strategy, there's a step by step, right? And it's Roth and it's IUL, and you got to have both those tools in your box. And people are just missing out. It's so. What the one thing you can't get back, right?
Yeah, time. Yeah, that's right. Yeah, you can't get back time. That's why whenever, you know, we have the conversation about fears, right? It's like, what am I missing out on that I should be doing today?
Right.
What is it that I'm supposed to be doing today? Because you don't get today back. Now, it'll drive you crazy if you go into this like crazy regret train and all that. It's like, look, what are we missing out on today, and what can we fix today that we goofed up yesterday, right? And I think that's one of those things. So. Why don't you hand out the number
one more time? It's 281-401-9008. And hey, we're wrapping up our money week here.
Yeah, money. So good week.
People picked up some nuggets, and we appreciate our effort out here. And we'll work on some new things next week. So we'll be back for this Monday, Motivation Monday, and we'll
see you guys then. Jason Bible, Robert Orfino, Texas Real Estate Radio Network.
Thanks, guys. Hey, John. How you doing, partner?
Good morning.
Hey, come on in. You know, my wife is Catherine.
Hi, Catherine. John Landrum. Nice to meet you.
Yes.
Talk yesterday.
Excellent.
Hey, how's it going?
Hey, Jason.
I couldn't tell who was out there with the reflection. I'm like, who are those guys?
We're wrapping up and we'll get going.
All right. So this is where the magic happens.
Well, yeah, I guess
today.
Today was magical, yes.
Right.
Oh, let me cut the stream off. Hold on 1 second. We're still alive.
Usually it's illusion.
Yeah.